Good afternoon, dear listeners. My name is Andrei Belinsky, and today I would like to present you our study, which is titled "As the Lack of Reversibility During Financial Crisis and Its Identification." Before I start the main part of our presentation, I would like to introduce you our plan. First of all, I would like to make a little introduction of the object of our study. Then, I would like to present you irreversible complexity measures based on Poincare diagrams. Then, I would like to present you graph-based approaches, the idea of multiscale time irreversibility index, and of time irreversibility measure based on permutation patterns. And after all, we will make some conclusions. For the object of our study, we've chosen the Dow Jones Industrial Average Index. You know that it is a price-weighted average of 30 blue-chip stocks that are generally the leaders in their industry. It has been a widely followed indicator of the stock market since October 1928, so it has a huge history, interesting dynamics, and it has been studied by different scholars for a long time. We have chosen it as Dow Jones has a lot of different crisis events that we would like to try to identify by the proposed in our study indicators and try to reflect its very nature. Irreversibility may be associated with complex self-organized processes which have long-range correlations, non-Gaussian dynamics, etc., and its loss may indicate the development of destructive processes. Our signal may be considered as irreversible or asymmetric if there is some function f that reflects statistical characteristics of our system that differ in forward and backward divergence. To have better look on crisis events of Dow Jones, we have split it into two periods, from 1920 to 1983 and from 1983 to 2021. Following measures of reversibility we will calculate using sliding window procedure. With this algorithm, we will calculate our indicators not for the whole time series, but for its subsequences. A Poincare plot is a type of recurrence plot used to quantify self-similarity in processes. Defining logarithmic returns and plotting them on Poincare diagram, we can define how normalized logarithmic returns at time t define returns and time t plus 1. In such a way, we can distinguish how symmetric, periodic, or chaotic is presented our time series. But usually we are interested in quantitative measures instead of qualitative. So regarding this diagram, we will define the following measures. First of all, Guzik's index, which can be defined as the fraction of distances above the line of identity to the number of all distances, and Porta's index, which can be defined as fraction of point below the line of identity to the whole number of points in the diagram. Also, I would like to present such measure as Costa's index, which displays asymmetry of positive and negative returns. We calculate it for different time scales using coarse-grained procedure, and then average it, getting generalized Costa's index. In the following figure, you can see Costa's index calculated for the first period of Dow Jones and the second period. Also, we can see Porta's index and Costa's index. In our study, we consider such approaches as graph-based, and according to them, we convert our time series into graph. Time series can be presented as horizontal visibility graph. In horizontal VG, we draw edge between two nodes if horizontal way between them is not blocked by any other node. The second approach that we considered is usual visibility graph, and here we can draw edge from one node to other possible nodes that considered node can actually reach. According to our experimental results, standard visual graph is presented to be the most suitable. To check how irreversible or asymmetrical are presented crisis events, we consider the ingoing and outgoing degree of each node and ingoing and outgoing local clustering coefficients. If the distributions of degrees or local clustering coefficients don't differ, we say that our subsequences of the whole time series is presented to be reversible or symmetrical, otherwise they're irreversible. We find the difference between ingoing and outgoing distributions so using such measure as Kullback-Leibler divergence. In this slide, we can see Kullback-Leibler divergence of degrees for the first period of Dow Jones and the second period. And here we can see Kullback-Leibler divergence of local clustering coefficients. Multiscale time irreversibility index is also such measure that allows us to quantify irreversibility or asymmetry in our time series. This measure is defined as the difference between activation information rate and the relaxation information rate. We do it for several time scales as for Poincare measures, and then we get generalized multiscale time irreversibility index. And in these slides, you can see how we behave this measure. The idea of the next approach is to consider such local patterns. Here, for our data points, we consider the temporal order. As you can see, here we can have different patterns, and some of them are repeats. To define the irreversibility in our data, we do the same steps for the reverse time series and find the difference between the distributions of permutation patterns using Kullback-Leibler divergence. In this slide is demonstrated Keil divergence of permutation patterns for the first period and the second period. Generally, we can see that normal periods of Dow Jones are characterized by irreversible or asymmetrical dynamics, long-range correlations, etc. For the first time, we have presented mentioned measures of irreversibility for the Dow Jones index, and we have presented that it is possible to reflect reversible nature of financial crisis in Dow Jones. So, thank you for your attention. I will be glad to answer your questions.